US crude last week once again traded with a modest bullish bias and achieved close to $88 levels, 87.6 levels. Remember, we had been recommending a buy in crude since $70 levels, and when it has given a breakout, we are told very clearly 84, 88, and then 92 are the three target levels. See, it has breached this channel and it is going towards the top of the channel. I hope you all profited. Now, what to expect next week from crude oil? Is it going to retrace as the bullishness getting diminished here? How to profit, we will see with the help of charts, followed with indicators, and towards the end, I will summarize the observations and give you the trading levels and strategy. Do like, share, subscribe, and comment. Do press the bell icon, which keeps you updated with the twice a day targets and analysis for crude, which I share first with the Asia session, next with the Europe session. So do press the bell icon. Also, you can remain updated by joining my free Telegram channel. The link is mentioned in the channel and video description. Let's start. First, on the daily charts, you can find out. See, prices are shying away to break past 88 zone. It has gone close to 87.6 and has failed to break past. At the same time, there is a strong support on the downside coming into picture at 85.5 and 84.8. These are definitely great support on the downside. Also, if you look at, see, if you look at the movement here, retracement, first, let's have a look at the breakout here from the bottom. This was the bottom, this was the breakout, then the rise, retracement. See, we mentioned that this is a flag formation, it is going to give a breakout, and precisely it did. Now, once again, it is trying to consolidate around this zone, and hence, once you see it is staying below 85.5 or 85.6 levels, and then further downside below 84.5 levels is where the bears will try to come in, and possibly a little retracement can be expected. It might try to trade within this zone for the next few trading sessions. That is my expectation, possibly falling at best till towards 82 levels. Not more, but yes, it can retrace a little. However, one must note that, see, there are resistances. The prices are retracing from the top. Prices are retracing from the top, so just very good resistance here. And the next candle is going to be important. If you see a breakout above 88, you can expect another round of rally. Now it appears oil is in a hurry to achieve the top of the channel. Remember, it is consolidating here. If you see it getting resistance, as long as 84 is respected, you can find out it rallying again on the upside. So we have to be careful here. The resistance on the upside is very strong. If it gives a breakout, certainly bullish momentum can be expected. Now, this is the first part to it. Let's have a look at the weekly charts as well. Now, on the weekly chart, see straight run there, then a reversal sign, couple of red candles, diminishing body size, and again a flat bullish candle. Now, a flat bullish candle suggested that there could be a greener candle. It precisely yielded a greener candle and a bullish candle, you can say, but with modest bullishness. The size of the body is minuscule here. This suggested that there is little resistance on the upside, which it is not willing to break past by. Yes, $88 levels is definitely a good level, because beyond 88.88 levels you can find out 89.6, 90 as the next, and 92 is the next milestone, which is the top of the channel. You can find out, see these candles here, and this is the top of the channel as well. This is definitely a great gate resistance, which is now not far away. One single bullish candle and achieving the top, possibly from there we can see a little retracement. However, right now oil does not appear to retrace even a little. Now, if you look at the behavior of oil, see, we have seen that this was the bottom here, this was the base it is created. It has fallen shy of achieving the bottom of this channel, and since then has reversed. Now, it is looking forward to achieve the top here, and this is definitely a great resistance. Breaking past this, you can see, you can treat this as a flag formation, and possibly beyond this, more bullishness may prevail here in crude oil as far as the positions are concerned. The 92 levels definitely are going to remain critical levels for oil here. Now, this is on the weekly charts. Let's have a look at the monthly. Now, see, on the monthly charts, one another observation here is the flat opening here. The previous candle coming with the tail, it suggests that there is a push from the downside and prices are willing to stay bullish. Now, if you just connect the highs of these three candles, you can see these are beautifully aligned. Thus, I will wait for a breakout above 88, which might try to pull the prices towards 1992 zone. See these two candles here with the flat top. Similar observation what we discussed here on the weekly charts and on the daily charts are getting reflected here. Now, on the downside, one more thing. See, it has opened on a flat note. Why these levels are important, you can see, because see, to 83.5, 83.6. If it falls below these levels, there has to be a stronger pullback. There will be, because once the candle turns red, obviously it has to yield a little more on the, and if it reverses from here, there will be more bearishness. So certainly I will be looking forward on the upside how 88 level behaves. Above 88 is where more bulls will try to pull the prices upside. Now, yes, the downside is limited because see, it has created a step here, and it is in the previous candle suggested that the prices are not willing to stay bearish. It is trying to move upside. This candle can be half the size of this candle and possibly achieve 92 in the month of September. But the indicators suggest something else. Let's have a look at the help of indicators. See, on the monthly charts, you will find the moving averages is spaced, well spaced one over other. This is still sign of bullishness here. It has precisely achieved the 100 months average and bounced back from those levels. So this is almost staying bullish here, divergent. Now, if you look at the stochastic, monthly stochastic has come to extremely overbought levels. This suggests that possibly there is a limitation for oil to achieve the highs, and hence we have to remain careful here. Even if it tries to achieve the highs, there may be a pullback. So what it could try to do, achieve 90, 92 levels very quickly and then show a pullback. That is what we can expect. Now see, right now the variance is also hitting the bottom, so it has a potential to for it to continue with the bullish momentum here. Now look at MACD. If you look at MACD monthly, on the monthly charts, you will find, I have told several times, see this wave. This is, isn't it a beautiful wave here? It isn't it a beautiful formation here? And right now it is achieved the second bottom and trying to reverse from here. A crossover here will bring more bullishness in the future for oil. We have to remain very cautious, alert here. Right now it is still on the verge of a crossover. It has not yet crossed over. It is just converging, and it has seen extreme bullishness here. Possibly if it breaks past 92, more bullish momentum in the coming months, and then yes, it may try to fly high. At the same time, one must not forget that it has not yet crossed over. It can continue to diverge on the downside as well. RSI looking upwards. Coming to the weekly. On the weekly charts, moving averages are converging. These are on the verge of a crossover. 88, 79 levels are now the greatest support for oil. It should not breach these levels any point of time soon. If it does, certainly the bears will try to take over. As long as 79, 80 levels are respected, we are not going to treat as bullish. Also, look at the moving averages are crossing over after a long, long time. You can see it crossed over last year, and since then it has stayed bearish. Now after this, now it is crossing over here. Certainly it can try to stay bullish from here and continue on the upside. If you look at the stochastic, see weekly stochastic, this is retraced with couple of retracement candles. Now again trying to enter into overbought zone here. Coming to the daily charts, the MACD divergent, MACD is bullish. Remember, we had been sharing this for long that it has formed the bottom here and it is going to fly, and see what beautiful rise we have seen here on our RSI is rising too. This is also bullish indication. Coming to the daily, now on the daily charts, moving averages have started to look upwards. Also, it is staying in this bullish channel here, the top of the channel again at around 90-92 zone. At the same time, look at the moving averages, well placed one over the other. The prices right now are little divergent from the moving average. I will look forward for price to converge at least towards the moving average, but it is waiting for the line to come up here at around 84, 85 and then retrace towards those levels. So what could be expected? We can still expect a range bound movement. If it fails to break on the upside, we can expect a very, very strong, or you can say a smaller movement on the downside with modest bearishness waiting for the moving averages to climb up and then consolidate there at around 84, 85 before rising again. This will be one of the probabilities which one can expect here. The stochastic was overbought. It has cooled down a bit. The MACD is still divergent, is still bullish here. But look at the candle size getting diminished, suggests that there could be conversion here, which might bring slight bearishness. But remember, this is the first wave here, second wave started, and I will look forward to for it to achieve higher highs. If it is bullish, it has to achieve higher highs before converging on the down. RSI near to overbought zone. So this appears that oil has still not yet lost its bullish momentum. It can continue, and the downside appears to be very, very limited only if it a major event is seen which is unforeseen, then only prices might retrace, and then also 79-80 levels are going to be major support levels on the downside. So even if oil tries to retrace now, we can first find out the support at 84 levels, very strong support, 84, 83.5, then 82, and then around 80, 79.5. These are three major resistance levels on the downside. On the upside, beyond 88, we can look forward to 89.6, 90 levels, and then 92 is where we are going to see maximum resistance for oil here. Now, see, this is the summary. Let me give you the trading levels which you should trade as per, and definitely you will make profits. And before I give you the trading strategy and levels, if you want to learn this art of trading, you should join my mentorship batch. The 25th batch is going to start on 11th of September. Only limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my Signal channel. Reach out to me for more details. With that, let's start first. Let's talk about the levels to. Yes, you can buy here at 87.2. Beyond this, we know 87.6 is the first major resistance, and then 88 levels. If you see oil staying above 88, we have a very good chance that it is going to hit 89.2 and then 89.55 and then 90. This is the first major milestone for oil. Beyond 80 levels, we may look forward to 90, and if it does stay above 90, we can look forward to 91.2, 92 levels as the next target. Very strong resistance here. This is stronger, and see, but the bullishness still increases in how it breaks past each and every levels here. So be careful of 88, 90, and 92. On the downside, see, on the downside, we are expecting just a little retracement because the price is a little high. It has gone to overbought level. So a little retracement does not mean that it is bearish or it is reversed. Reversal is breaking a major trend and going against the trend. That is what the reversal is. Right now, it is consolidating. And if it continues to consolidate or retrace, you can take a sell entry here at 86.3, below which one can expect 85.6 as the major support. 85.6, 85.8 levels, I will say. This is the major support here. And below this, you can expect 84.8 as the next support. Now, if and only if oil stays below 84.8, further bearishness might take it for 84, 83.5 levels, the next stronger support zone. This is going to be very strong. Below this, you can expect 82 as the first milestone. This is where uh, oil might turn bearish. Chances for it to break past even 83.5 are less. And yes, a little retracement is possible. However, not a reversal. Below 82 is where the bears will try to take over, and then we can look forward to 80.5, 79.6 zone. This is going to be the strongest support on the downside. I do not see oil breaking below these levels, but yes, these are markets. Everything is possible. Hence, trade as per the levels. Even if it tries to retrace, remember 83, 83.5, 84 levels are going to be very strong support zone. And on the upside, be careful at 90 and 92. Take positions accordingly. Have a great profitable trading week ahead. Do like, share, subscribe, and comment. Join my Signals channel mentorship batch. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. See you again with the daily analysis, twice a day analysis for crude. Do watch that as well. Thank you.